Awesome. Hello, and welcome to another episode of Decentra Lounge, which is brought to you by GlobalStake, your institutional and truly decentralized bare metal staking service provider. Today, we're very excited to have a wonderful guest on the show, Mr. Ken Chapman. Ken, for those of you that are not aware, is a finance executive with 20 plus years of experience in both traditional finance as well as digital assets. His experience in traditional finance includes working on both the buy side as well as the sell side of capital markets with firms including JP Morgan, Bank of America, and Bridgewater Associates. However, his recent experience in digital assets includes leading tokenization and cryptocurrency initiatives firm-wide at Wells Fargo, as well as being the head of banking and capital markets at Anchorage Digital, which is the first nationally chartered crypto bank. Ken also previously served as an active duty U.S. Army officer before working in finance. But now he has a consulting practice, T10 Ventures, where he advises companies on strategy for digital assets and blockchain. And Ken is also a graduate of the United States Military Academy at West Point with an MBA from Columbia University. Ken, we're very excited to have you on today.
Thank you very much for having me.
Of course. So, Ken, can you kind of just start us off here? Share with us your story and journey from traditional finance to the world of digital assets and blockchain. What kind of sparked your interest in this field?
It really came about quite by accident. I was at Bridgewater Associates, which is the largest hedge fund in the world, and the CEO had asked the question, what is blockchain and what does this mean to our business and what does it mean to capital markets? And this was in 2016, around the time that Ethereum was really taking off, smart contracts were really taking off. And so I reached out to the big consulting firms to find somebody that could answer the question. And I found people that understood blockchain. I found people that understood capital markets, but I couldn't find anybody that knew both. And so I know capital markets, and so to answer the question, I need to learn about blockchain. And so what I did is I went back to the very beginning. And so I went back and I read the Satoshi Nakamoto white paper. And my first thought when I read it was, this is pure genius. It solved the Byzantine general's dilemma. You have, trustless transactions. And I thought it was, very interesting. But also in 2016, when I first, was introduced to Bitcoin, my initial thought was that the U.S. government and the governments of other developed countries would outlaw it. And so I'm actually pleasantly surprised that it's still here today. And so I went from understanding Bitcoin then to Ethereum, and really dug in to understand, the smart contracts and the implications. And once I did that, I was, kind of saw the vision, back in 2016 around the power of smart contracts and also what, could be the future for tokenization. And we're really seeing that today in 2023. And so I left traditional finance in 2018. I was really excited about blockchain and cryptocurrency. And so I started my own practice, T10 Ventures, advising a number of early stage companies. Most notably, in the summer of 2018, I helped a company, CryptoFuse, launch at the London Blockchain Expo. We were going to launch a ICO in August of 2018, but just weeks prior to that, the SEC came up with a guidance that they were applying the Howey test, which, according to our attorney, we would be, if we went forward, we would be issuing a unregistered security. So we canceled the ICO, and then I got involved with a number of other companies. And then I ended up going to the last company that I thought I would go to once I left traditional finance. I ended up going to Wells Fargo. And Wells Fargo at the time, had a reputation for really being anti-crypto. And at the time, they had made national news because they were prohibiting their retail customers from moving money from their checking account, their Wells Fargo checking account, to Coinbase. But they were looking for someone to really answer the question and help lead initiatives around the same question that was asked at Bridgewater. What is blockchain and what are the implications, for capital markets? And so at Wells Fargo, I led tokenization initiatives to include repo or repurchase agreements. Basically, for those who don't know, it's typically an overnight transaction where you're trading cash for some sort of security, typically a treasury. And this is a multi-trillion-dollar market, massive market. And so using this technology, you're able to go from settling that trade over a 2-day period to being able to settle, within minutes. And so it's very powerful as far as being able to manage collateral, manage cash, and then also significantly reduce counterparty risk. Other initiatives I got involved with included tokenization of mortgage-backed securities, and then also applying blockchain technology to equity swaps. In the summer of 2020, Bitcoin really started taking off in price, and there was a lot of interest from customers, in Bitcoin, and so Bitcoin and also other cryptocurrencies. And so I essentially became the crypto guy at Wells Fargo, and was looking at all potential, use cases, business cases, looking at customer demand, and looking at where, products and services that Wells Fargo could potentially offer. And one of the use cases I was looking at, or business case I was looking at, was around crypto custody. And so I looked at a number of firms in the industry, and the company that seemed, to check all the boxes and being the best partner, at the time was Anchorage Digital. And Anchorage at that point was the first and only crypto custodian to have a national bank charter from the OCC. And so I really liked the company. Was a good fit for Wells Fargo, but also a good fit for me. So I ended up moving over to Anchorage Digital, where I was the head of banking and capital markets up until the end of last year. And since then, I've gone back to T10 Ventures, which I created right after I left Bridgewater, and that's what I'm doing today. And I'm advising a number of early stage companies. One company is a crypto custodian. Another is a company that is tokenizing accounts receivables. The company's called. Actually, I'm going to pause right there.
Yeah, of course. Really appreciate the backstory there. I'm kind of curious what helped spur you to move from, for lack of a better term, not traditional finance, but the blockchain-focused traditional finance world, more like SIFI of Wells Fargo, to truly jump in with Anchorage Digital and to adjust your career that way, to be more open-minded to a lot of these public cryptocurrencies. Because, for instance, a lot of people that still work at larger firms like Fidelity or JP Morgan are sticking with private blockchains that they're creating internally. What kind of pulled you over to the public sector?
Well, for me, it's I think the entire space is interesting and fascinating. And so for me, when I first left Bridgewater and created T10 Ventures, I was involved with crypto native companies, and I was involved with a company that had its own chain, public chain, and also was going to issue its own cryptocurrency. So it kind of went from being involved with cryptocurrency to more traditional tokenization of real world assets, and then kind of a combination of those, going forward with Anchorage Digital, and then now today. So it's really been, to me, I don't really see it as being two separate things. I think it's just, they're along the spectrum of what is, made possible with the technology.
Awesome. So then I guess last question in regards to Wells Fargo and Anchorage Digital, can you kind of describe the key differences you experienced being in a traditional banking environment versus a crypto-focused bank?
I would say it's just the kind of the mindset, coming out of being in a traditional institution. It doesn't matter whether it's Wells Fargo or any of the others. You're trying to introduce something that's new and novel, and in some cases things that where there's not a real clear regulatory framework. And so those larger institutions move slower. They do eventually get there, but they move much slower. And then looking at crypto native companies, they have a different mindset. From the very beginning, from the leadership, from the founders all the way down, you have this mindset around, hey, there's this technology, and and we can reimagine how banking is done and how value moves, on chain, and so it's really it's really just a change in mindset. And to me, I enjoyed working in both, in both companies. But if you want to move faster, and the crypto native companies is where it's at.
Great. So then transitioning over to your current firm that you're working at now that you started, T10 Ventures, can you kind of give us, your perspective on the biggest challenges and opportunities that for institutional adoption of cryptocurrency in today's market?
Well, to me, I think there's a couple of things that will really be milestones in the industry. One is a Bitcoin ETF or Bitcoin spot ETF. There are already Bitcoin future ETFs out there, but I really think that that's going to be a game changer. Now, there's big companies out there that have applications with the SEC. For example, BlackRock is the biggest asset manager in the world, and they have an application, with the SEC right now, and are actively working with the SEC to get that application approved. And when the first Bitcoin ETF gets approved, that's going to be kind of the catalyst for institutional adoption. And also, it's going to allow retail investors to be able to work with a company like BlackRock or Fidelity or one of these other large companies that they know and trust, to be able to get exposure to this asset class that today they may not be comfortable going through other companies, or crypto native companies. So I think that's going to be a game changer. And then also, I think same thing also with the SEC. There's something out there called SIFI 121. It's a staff administrative bulletin. And what this does, kind of at a high level, is it, without getting into too much detail, it kind of restricts the larger traditional financial institutions from providing custody for digital assets. And so my view is that that will be either revised or revoked sometime in 2024. And when that happens, then you're going to have another institutional milestone where the institutions can now provide services to digital assets the same way they provide to traditional assets today. And so between the rules getting clarified for larger institutions by modifying SIFI 121 and the approval of a spot Bitcoin ETF, those two things happen in 2024. We're really going to see the industry really take off.
I love it. Very, very well thought out answer. So, what I'm kind of curious to expand upon a little bit further, I think a lot of people in today's age forget how slow industries move. So the banking industry lasted traditionally for hundreds of years. And then in the last couple of decades, we've started to really see this huge push towards digital currency. So people are expecting things to happen quicker than they probably will. So the root of my question here is the next bull run. So whether that's 2024, 2025, 2026, what have you, do you believe that this will be the time period where institutional money is really just putting their foot in on a global perspective? Or is this going to be where banking gets radically changed globally by implementing tokenization and real world assets fully? Or is this really just going to be a testing ground and all that's going to happen maybe in the 30s?
I'll answer this really in two ways. One, I'll answer it around cryptocurrency itself, and then I'll talk about tokenization. So with cryptocurrency, as I mentioned before, a couple of things. If the regulators provide more clarity around and provide a really solid regulatory framework for the larger institutions, then you're going to, and combined with an increase in price of Bitcoin and other cryptocurrencies, I think you're really going to see kind of a maturity and an adoption, a better adoption by institutions driven by customer demand. And so I think that happens in the next bull run if there's enough regulatory clarity, and that's kind of a big if. And then around the tokenization side, every large institution that I'm aware of is leaning in on tokenization. They at least have a small team looking at it, or in some cases they have an organization around tokenization. And you're seeing companies like JP Morgan really leaning hard into tokenization. They just announced earlier this month their tokenization of collateral initiative with BlackRock. And then at BlackRock, you've had Larry Fink, who's the CEO of the company, come out and say, tokenization is the future. And so you're seeing, and you're seeing a number of initiatives. They're not grand in scale, but you're seeing a number of initiatives, across the industry around tokenization. You're seeing, Wisdom Tree, KKR, and a host of other large, well-known firms really, taking tokenization seriously. So I see that. I don't see that necessarily as a bull run. I just see that as a continuing, building out of the industry. And I think that we'll continue to see improvements and progress over the next couple of years. But I think we're still a few years away from tokenization being at the point of maturity where we stop talking about it, because at some point tokenization is just the way things are done, and nobody's going to care.
Just hearing that response, Ken, I was thinking about just recently with the BlackRock filing of the ETF. The SEC came back and said they wouldn't allow in kind, and it has to be on a cash basis. Do you think that just sort of underscores the lack of understanding by our current regulatory bodies with regard to this future tokenization? I mean, because you would think that if you wanted to render your ETF assets and actually get physical Bitcoin with a spot ETF, that would be allowed. But the current way that it's moving, it seems as if that's not going to be allowed. Do you think it's just a matter of time before these regulatory agencies kind of catch up to the idea of tokenization?
Yeah, I really can't speak to how the SEC is thinking about this, but to me, even if they were to approve a cash, or as you mentioned, cash instead of in kind, to me, that would be just a massive milestone for the industry. And just because this application, is being, asked to do things one way, doesn't mean an application a year from now can't do it another, and perhaps be able to, exchange in kind. So just, whatever has to be, my view is whatever needs to be done to get a spot Bitcoin ETF out there. I think, the industry should, accommodate that just to get it out there, because that's going to be such a big deal for the industry. And it's going to be a catalyst for a lot of other things in the industry.
Ken, so last question of the day. Very curious for our listeners that are institutional as well as in the capital market space, hedge funds, banks, VCs, etc. How could they possibly work with you? Is there some type of an application, or how can they actually reach out to you? And do you have the capacity to work with new clients such as this at this time?
Yes, I have the ability to pick up new clients this time. And just to recap, basically I do strategy work and also lead initiatives similar to what I've done previously at Wells Fargo and other companies I've worked for. It focused around cryptocurrency, capital markets, or the application of cryptocurrency in capital markets, and then also tokenization. And again, just to recap, I led tokenization initiatives at Wells Fargo, and that's also companies I'm working with today, helping them on their tokenization journey as well. And if you want to reach out and talk to me, you can reach me on LinkedIn. Again, Ken Chapman at LinkedIn. And then also you can send me an email at ken@t10ventures.com.
Awesome. Thanks so much, Ken. Those of you that are listening, we really appreciate it. Ken, thank you as well for joining again today. If you are interested in working with Ken, please follow the directions that he just outlined there. But thank you all again, and we'll see you on the next episode of Decentral Lounge. Y'all have a great day.
Thank you.